Welcome back to Dinar Community Channel. What if a single dollar could soon be worth just 18 cents in Iraq, because the dinar skyrockets to $5.45? Is it a financial masterstroke hidden in plain sight, or the most seductive fantasy ever sold to desperate dreamers? This controversial theory has believers preparing for windfalls, and skeptics warning of economic chaos. The truth behind the $5.45 dinar rate could change everything. Or nothing. In the realm of currency speculation, few topics are as polarizing as the Iraqi dinar. Ever since the early 2000s, a niche yet passionate community has debated whether Iraq's beleaguered currency might one day see a dramatic revaluation, an event they believe would turn everyday people into overnight millionaires. At the heart of these conversations lies a highly controversial idea, the $5.45 dinar rate theory. Depending on whom you ask, it's either a financial masterstroke waiting to unfold or a pipe dream teetering on the edge of delusion. The theory posits that the Iraqi dinar IQD, currently trading at a fraction of a US cent on global currency markets, will eventually revalue to an astounding $5.45 per dinar. Such a revaluation, if true, would represent not just a historic financial shift but a massive redistribution of wealth. But is there any basis for such a leap? And more importantly, would it even be feasible, economically or geopolitically? Supporters of the $5.45 rate point to several pillars to justify their belief. First is the history of Iraq's pre-war economy. Before the 2003 invasion, Iraq's currency had much greater value, at one point trading well above $3 USD per dinar. This historical reference is seen as proof that a return to similar or even higher rates is possible once Iraq stabilizes, its oil production scales, and its economy reintegrates into the global financial system. Proponents argue that Iraq is sitting on one of the largest proven oil reserves in the world, with untapped resources that could drastically increase GDP over the next decade. To them, the dinar isn't just undervalued, it's artificially suppressed. There's also the monetary policy argument. If Iraq were to shift from a program rate, a rate managed through central bank interventions and IMF guidance, to a market rate, reflective of its true asset-backed potential, supporters believe the dinar could skyrocket. This theory is further bolstered by whispers of global currency resets, IMF-backed asset reforms, and the transition from fiat to asset-backed systems, a narrative particularly popular among dinar investors and currency reset circles. They see the $5.45 valuation as a necessary adjustment for a future where oil, gold, rare earth minerals, and digital assets anchor a new financial world order. But this is where optimism collides with economic reality. Critics of the theory label it not just improbable, but dangerous. They warn that the math simply doesn't add up. At its current money supply, even a conservative revaluation to $1 would balloon Iraq's monetary base into trillions of US dollars, numbers that would not only dwarf Iraq's GDP but throw the global monetary system into chaos. A $5.45 valuation would be exponentially worse, requiring Iraq to back the dinar with an economic footprint that even oil-rich Gulf nations like Saudi Arabia would struggle to justify. Another issue lies in global central banking systems. Major institutions like the Federal Reserve, IMF, and World Bank have never supported, nor confirmed, any plans that would allow a revaluation of this scale. In fact, sudden and massive currency shifts, especially involving a single country's fiat currency, are considered destabilizing. For the dinar to reach such a high valuation, Iraq would need not just economic growth, but complete global coordination, new trade agreements, commodity-backed settlements, and perhaps a new Bretton Woods-style overhaul. None of this has been officially announced. Then there's the matter of market dynamics. Currency exchange rates are not pulled out of thin air, they reflect supply and demand, interest rates, balance of trade, capital flows, inflation, and investor confidence. Iraq's ongoing challenges, ranging from political instability and corruption to infrastructural damage and regional volatility, make the idea of investors placing high confidence in the dinar extremely risky. Even with reforms, Iraq would need years of sustained progress, credibility with rating agencies, and a stable banking system before international markets could entertain such a valuation. Still, belief in the $5.45 theory has endured, thanks in part to an online echo chamber of forums, YouTube channels, Telegram groups, and insider-sounding updates that present unverified leaks and intel as fact. They speak of elite redemption centers, Tier 1 banking rollouts, high-level meetings in Zurich and Dubai, and whispers from military-connected sources who claim the global financial reset is imminent. In these circles, the $5.45 number is more than a target, it's a symbol of vindication, proof that holding on to the dinar was not just a gamble but a divinely timed investment. These communities often promote the theory through anecdotal evidence, claiming that banks are quietly preparing exchange protocols, that high-level bank employees have confirmed pending rate changes, or that NDAs non-disclosure agreements are already being signed by early redeemers. Supporters argue that silence from governments and media isn't evidence against the theory, but rather, proof that something massive is brewing behind the scenes. This level of conviction borders on religious zeal, and for many, the dinar has become more than a currency, it's a symbol of hope. After all, the promise of a life-changing payout can be a powerful motivator, especially for those who feel disenfranchised by traditional financial systems. In a world of inflation, rising debt, and limited upward mobility, the idea that a small purchase of foreign currency could one day buy you a mansion, a yacht, or generational wealth is intoxicating. But therein lies the danger. For every hopeful investor, there's another who has spent life savings on dinar, only to be met with stagnation year after year. Families have gone into debt. Retirees have delayed their plans. Some have sold homes or taken out loans, convinced that the windfall is just days away. The belief becomes self-reinforcing. If it hasn't happened yet, it's because they are delaying it for security, logistics, or political reasons. The lack of proof is seen not as failure, but as evidence that it's being hidden from public view. This is where financial advisors, economists, and legal experts raise red flags. While there's nothing illegal about buying foreign currency, promoting wild and unproven projections, especially with financial stakes involved, borders on unethical. And while there are certainly legitimate scenarios where the dinar could increase in value moderately over time, to expect a leap from fractions of a cent to over $5 per unit without any transparent monetary policy, institutional backing, or economic transformation is, at best, wishful thinking. That doesn't mean Iraq is without potential. The country has made strides in infrastructure development, regional cooperation, and economic diversification. Baghdad has hosted IMF discussions, implemented banking reforms, and pursued digital financial technologies. Oil exports remain strong, and new partnerships with China and other non-Western economies have broadened Iraq's geopolitical options. If these developments continue, the dinar could eventually see positive movement, perhaps even significant appreciation within a range consistent with GDP and trade activity. But even optimistic economists would balk at $5.45. The global currency market is a zero-sum arena. For one currency to gain massive strength, another often has to weaken, or an extraordinary amount of value must be created out of thin air. If Iraq's dinar were to become worth over $5 per unit, the implications would be seismic. Iraq would instantly become one of the wealthiest countries per capita. Its citizens would wield more purchasing power than Americans. Oil deals would be restructured overnight. Global trade relationships would collapse and rebuild under new economic models. It wouldn't be just a financial event, it would be a redefinition of global economics. Could such a world exist? Perhaps, in the long arc of human history, radical shifts are not impossible. But such changes typically involve decades of preparation, global consensus, and systemic reform. Nothing about the current state of Iraq, or the global financial order, suggests that we are on the brink of such a transformation. Still, the theory endures. And maybe that's the most fascinating part of all. Whether it's grounded in logic or fantasy, the $5.45 dinar theory taps into something very human, the dream of liberation. The hope that, through patience and faith, something extraordinary might arrive to rewrite the rules. For its supporters, that dream is worth holding onto, regardless of the odds. In the end, the real question may not be whether the $5.45 rate is true or false, genius or delusion. The deeper question is what it says about the world we live in, and the lengths to which people will go for hope in a system they feel has left them behind. Perhaps the dinar will rise. Perhaps not. But one thing is certain. The dream is alive, and for many, that alone is enough to keep believing. Like and subscribe for more videos.